Howdy, folks. Welcome to Liberty Call. Today is, what day is this? Wednesday, March 20th, 2024. Hope you're having a fantastical day out there. It's been a busy day. I've had lots of meetings, so trying to shove this in between, just talked to my father, and I got another meeting coming up in a little while. So again, hope you're having a fantastical day out there. It is a beautiful sunny day here in Colorado. The sun's out. The snow is still melting. We've still got some pretty deep spots. The Dolman Glacier out here in my front yard, which never gets any sun because this faces north. The sun's on that side of the house. So there will be a glacier out here until like May. So anyways, if it is your first time watching Liberty Call, you didn't come here for the snow report. You came here for financial news. The Fed had a meeting. All right. So if you could give me some thumbs up. Yes, you in the brown shirt. Yeah, right there. If you could give me some thumbs up, like, share, subscribe, follows, and press that notification bell. Let's get into today's numbers. Let's see how things did. Markets were in a good mood after the Fed meeting finished up. Dow Jones was up 1.03%, 401 points, closed at 39,512. S&P 500 up 0.89%, closed at 5224. NASDAQ up 1.25%, closed at 16,369. The VIX down 5.64% today. It's at 1304. Canada up 0.85%, Brazil up 1.25%, and Mexico up 2.04%. In Europe, Germany up 0.14%, the UK flat down 0.01%, France down 0.48%, the Netherlands down 0.02%, Spain up 0.48%, Italy up 0.09%, Switzerland up 0.35%, and Portugal up 0.48%. Russian exchanges both green today, MOEX up 0.15%, RTSI up 0.29%. And the Asian markets, the Nikkei was up, actually it was closed, Australia up 0.1%, Australia down 0.1%, New Zealand down 0.03%. In China, the Shanghai was up 0.55%, the Shenzhen Component up 0.21%, China A50 up 0.39%, DJ Shanghai up 0.41%, Hang Seng up 0.08%, and the Taiwan weighted down 0.37%. So you're like, Ray, why was the market up so much today? That's crazy. Well, it wasn't up most of the day. Let's go to the chart. Here was the opening, and it opened down. Here's the Dow was down about 0.25%, kind of hugged the flat line up and, back and forth until 12 o'clock. Well, my time, 2 o'clock Eastern. And that's when the Fed meeting occurred, and Chairman Powell basically reiterated that there's 3 rate hikes still on the table for the year, and the market just jumped. So it went from flat up to, what was the peak? About 1.04%-ish, somewhere in that range. Same thing with the S&P 500 was up about 0.85 at its peak, and the NASDAQ was up about 1.25. So yeah, just insane to see that. I was in the middle of a meeting and I had on the daily chart and I was zoomed in and I'm like, it was just going up and up and up. And I'm like, whoa, what's going on there? Anyways. All righty, let's close that. And there we are. And all right, let's get to today's market recap. S&P 500 jumps above 5,200 for the first time as Fed keeps 3 rate cuts on the table. Again, that's what made everybody happy. The S&P 500 surged past the 5,200 mark for the first time following the Federal Reserve's decision to maintain interest rates unchanged, alleviating concerns about inflation and signaling a commitment to 3 rate cuts this year. Again, it's a commitment based upon the facts right now. So again, don't freak out if they actually start raising rates or do less. The Fed's stance, keeping rates steady and projecting a benchmark rate decrease to 4.6% in 2024 with 3 rate cuts, eased market fears surrounding inflationary pressures. Treasury yields declined, notably in response to the unchanged rate path for 2024, with the 2-year Treasury yield dropping to 4.64%. In corporate developments, Intel received nearly $20 billion in government grants and loans to bolster chip production, with Tesla announced price increases for its China-produced Model Y vehicles, marking a reversal from its previous price cuts. General Mills saw a modest increase in its stock value after reporting better than expected quarterly results, aided by higher prices across various product categories. Chipotle Mexican Grill approved a 50-to-1 stock split, contributing to a rise in its stock price, while Boeing's stock rose despite a warning of increased cash burn due to quality-focused initiatives. Well, based on the last few months, it looks like Boeing hasn't had a lot of quality management. But hey, a lot of those were United planes, and from what I hear, that's probably has more to do with it, their maintenance department. However, Signet Jewelers experienced a significant decline in stock value following a sharp drop in sales during the crucial fourth quarter, especially in North America. In the crypto sphere, stocks were mixed as miners like Marathon Digital and Riot Platforms saw gains, alongside MicroStrategy Incorporated amidst Bitcoin's rebound. Riot Platforms particularly surged over 8% after an upgrade from JP Morgan, reflecting optimism about the company's scalability in the crypto mining operations. Overall, the market responded positively to the Fed's stance on interest rates, with various sectors experiencing fluctuations driven by a mix of corporate news and broader economic factors. All right, so again, everybody's in a happy mood because the Fed decided that they're going to keep things the same, like they said they would. Again, this is not, the only time people freak out really is when it goes the opposite way. Next up, Federal Reserve holds interest rates steady, maintains forecast for 3 rate cuts this year. The Federal Reserve concluded its latest policy meeting on Wednesday by maintaining interest rates within the 5.25 to 5.5 range, reiterating the need for 3 rate cuts. Again, let me pause here. Why do we need to have 3 rate cuts if the economy is as good as everyone on TV and in the media claims it is? Because if everything's fine, you would actually leave rates as they are. Or if the economy continues to run a little hot with inflation, you actually raise them up a little bit more until inflation subsides back to 2% where they want it. I prefer 0, and go from there. But hey, what do I know? I'm just a financial advisor. Despite anticipation that sticky inflation data might prompt a reduction in projected cuts, the Fed remains steadfast in its stance. Fed Chair Jay Powell emphasized that while recent inflation readings were higher than expected, they didn't alter the overall narrative of inflation gradually declining towards the 2% target. While the Fed's forecast for 2025 saw a slight moderation in expected rate cuts, the projection for economic growth in 2024 were revised upward. Despite acknowledging elevated inflation levels, the Fed highlighted that the economy remained robust with strong job gains and consumer spending. Powell also addressed discussions about slowing the reduction of the Fed's balance sheet, a strategy known as quantitative tightening, which involves allowing bonds to mature, thereby tightening financial conditions. The Fed is contemplating a slowdown in QT to avoid market disruptions, though no decision was made during the meeting. Overall, the Fed's decision to maintain its rate stance reflects its confidence in the economy's resilience amid inflationary pressures. However, the central bank remains vigilant and committed to adjusting policies as needed to ensure economic stability and achieve its inflation targets. Funny, there's no mention that the yield curve has been inverted for, here, let me bring up the yield curve chart. We'll put it on the screen here for you. There it is. All right, so here's the current yield curve right now. And let's see, when did it invert the first time? We haven't had a normal curve since about February. Yeah, 2 years. So 2 years ago, this is what a normal curve looks like. Granted, we like it higher along the yield curve, but it just, not good. So, for everyone to ignore this, granted, the people I listen to don't seem to ignore it, but anyways. All right, last up, got an article here from Zero Hedge titled, Liz Warren and Socialist pals want to normalize confiscation of assets with an ultra-rich tax. All right. Senator Warren reintroduced her ultra-millionaire tax, a bold proposal aimed at addressing wealth inequality by levying taxes on the ultra-rich. Yeah, because it's their fault that the government's broke. The bill suggests a 2% tax on households with a net worth between $50 million and $1 billion, escalating to 3% for households exceeding $1 billion. Well, that's very generous of you, Ms. Warren. Alongside Warren, Representative Pramila Jayapal and Brendan Boyle, never heard of Brendan, introduced a companion bill in the House signaling bipartisan support for wealth redistribution measures. Who's Brendan Boyle? It says bipartisan, so I know Jayapal is a lefty. So Brendan Boyle, who is this child? It says, what's his political? He's a Democrat. It's not. What I say there? bipartisan by House, having a House in the Senate. But anyways, the rationale behind Warren's proposal stems from concerns that billionaires exploit tax loopholes, paying lower tax rates than ordinary workers. Well, billionaires don't typically get a a paycheck like a W-2. Most of them receive most of their earnings and wealth through dividends, that's capital gains, things like that. So by targeting the top 0.05% of the wealthiest households, Warren aims to generate substantial revenue estimated at $2.7 trillion over a decade. Well, that should make a huge dent into the $35 trillion debt that we have right now. This revenue could potentially fund various social programs or infrastructure projects addressing critical societal needs. The federal government's job is not to do social programs. It's for common defense, ensuring a free trade zone between the many states, and diplomacy with foreign powers. Those are the only three functions the federal government has. Roads, all that other stuff, it's outside their scope of jurisdiction. So again, we need some politicians who are going to come in there and clean house, just tear everything up. And because we could probably run this government for well under $1 trillion. I mean, minus debt service, but anyways, however, critics argue that Warren's wealth tax could have unintended consequences. No kidding. The proposed tax would target assets held by ultra-rich, including investments used for business ventures. Dan Savickas of Taxpayer Protection Alliance warns that such a tax could lead to a liquidation of these assets, hindering business growth and potentially resulting in job losses. The perspective highlights concerns about the broader economic impact of redistributive tax policies. Moreover, Warren's plan includes provisions to target wealth held in trust and imposes a 40% exit tax on individuals renouncing their citizenship to avoid taxation. How nice. While their measures aim to prevent tax evasion and ensure fairness, they raise questions about individual financial freedom and mobility. Despite these criticisms, Warren's proposal aligns with President Biden's broader agenda of increasing taxes on corporations and the wealthy. Of course, I don't know why people on the left vote for these jackasses, but Biden's push for fair taxation was evident in his recent State of the Union address, where he advocated for raising the minimum corporate tax and imposing a minimum tax on billionaires. Well, again, here's the problem. If you go dig into the tax numbers, less than half the people actually pay into the system at this point. So there's 50% of the American people who are free riders. I think that's the term that a lot of people on the left like to use. So it's the top. I mean, really, if you're making over like 80 grand a year, you're in the top 10% of income earners, or maybe top 20%, and you're the ones paying all the tax. If you're making less than that, you're really contributing nothing to the system. While Warren's tax proposal has garnered support for some Democratic senators, House Democrats, and Senator Bernie Sanders, its implementation faces significant hurdles. The feasibility and effectiveness of such a tax policy remains subject to debate, with concerns about its potential impact on economic growth and job creation. Again, these are not jobs for the central government. In summary, Warren's Ultramillionaire Tax Act represents a significant attempt to address wealth inequality through progressive taxation. However, the proposal raises complex economic and practical considerations, highlighting the ongoing debate surrounding wealth redistribution and tax policy in the U.S. You cannot tax people into success. There's a reason most people are poor. It's because they're lazy and stupid. So it's just the way it is. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.